Hi, I'm Ant Joblin and welcome to IP Go, the show where we take a look at the IPO world, past, present and future. Today's California-based firm has a market cap of $263 million and listed at the end of January 2020. Velocity Financial is a provider of property mortgage solutions for real estate investors and small business owners. So, in a sense, can act as a nice indicator for the growth prospects of the US economy. Being a bit more granular, they describe themselves as vertically integrated real estate finance company that primarily originates and manages investor loans secured by 1 to 4 unit residential rental and small commercial properties. They refer to these collectively as investor real estate loans. Velocity employs 230 people and operates nationwide in 46 states across their extensive network of independent mortgage brokers that they have been accumulating since their founding in 2004. Last year, they booked revenue of $147 million with net revenue of $141 million from a total portfolio of $1.9 billion. On top of that, the firm claims to have delivered $2.5 billion in securitizations last year and $691 million in loan originations. Velocity's pre-tax return of equity was 15.8% and its portfolio yielded 8.82% returns in 2019. It's clear that they're doing something right, and they see that coming from their competitive advantage, namely the combination of franchising their brand to strong local management teams, secure long-term funding agreements, and in-house asset management, resulting in enhanced loss mitigation. In terms of their market space, Velocity is focused on 1 to 4 unit residential rental and small commercial properties. Residential housing is the largest asset class in the US, valued at around $27 trillion, a third of which is rental. Velocity sees this as a huge but fragmented market that can benefit hugely from their institutionalized approach to servicing. They target investor real estate loans with loan-to-value ratios, or LTVs, between 60% and 75% at origination, as the firm believes that borrower equity of 25% to 40% provides significant protection against credit losses. As of September 2019, their loans held for investment had a weighted average LTV at origination of 65.2%. Additionally, as of September 2019, their borrowers personally guaranteed 99.9% of the loans held for investment portfolio and had a weighted average credit score at origination of 706. So, at face value, this is a firm that is taking a very strict and measured approach to lending, a stark difference from what happened a little over 10 years ago. Now, Velocity made their initial public offering of 7.25 million shares of its common stock at $13 per share on January the 17th, 2020. The company intends to use proceeds from the offering to repay a portion of its outstanding corporate debt, with the remainder left for general corporate purposes, while Wells Fargo Securities and Citigroup act as joint book running managers. That's all we have time for today, but if you are looking for proxy indicators for the health of the US economy, this is a stock worth keeping an eye on. As always, make sure you do your own due diligence before making any investment decisions. See you next week.